Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading doing the nightly market update video for January 31st. Happy Wednesday, happy Fed day, happy short day if you're short today. It was a pretty big down day today, and we'll get in that in just a second. Lots to talk about, lots moving around with the market, and so let's just jump right in. I've got the S&P or the ES up on the screen here, and as you can see, let me take well, this is the Nasdaq here, and this is the RUT, and these are the ticks. But let me take that down for now. So coming into today, we're chopping a little bit lower overnight, kind of flushed down a little bit as a continuation. The light gray is the overnight session, and then this is the cash session. So then we were chopping sideways going into the Fed. Now this was, let me see if I can get my time right. Let's see. Okay, so there's the Fed. When the Fed came out right here. We talked about this last week. If you listen to the videos, there was like a 96% chance of no rate cut, more or less. No rate cut, kind of came down straight back up, and then this is when Powell starts talking, and we just free fall from 49.30 to 48.60, 48.66. So that's about what, 65 points. I mean, basically straight down into the close, and that was pretty brutal, especially after. If you look at this, we had. Let me do 3-day right here. This was yesterday, so we had a big flush down yesterday. Overnight, kind of bleeding lower. Big flush down today, so we have lost a lot of ground in 2 days. See down here, Tuesday, Wednesday, and tomorrow is Thursday, right? So what happened? Well, Powell said that they're not going to get any hurry to cut rates. I've been telling you guys, and everybody knows this, but I've been saying that, they are not. They don't have to cut rates at the March meeting. There's no Fed meeting in February. There is in March, and everyone was so convinced they're going to cut rates in March. They're going to cut rates in March, and I thought they probably would too. There was pretty good probability of that. Well, they came out today and said maybe not. We're in no rush to do it. We want to see inflation come down towards the 2% level before we get comfortable cutting rates. And the market said, oh man, that's not what we thought was going to happen. And you see the big flush. And I'm pretty sure a lot of people got really whacked today with long positions, and everybody was bullish into this. I was too, but we were very cautious going into here. We actually had an update today, believe it or not, but most of that was because of Eli Lilly. We were long Eli Lilly, but let me show you this. Let me back this out a little bit here, and I'll show you what I'm talking about. So let me do a 20-day chart. So if we look at a 20-day chart here, you can see off the low, here's 4,700. Take a little breather. 49.57. So there's 49.60. Essentially, we're 40 points away from 5,000, and all Powell had to do was to knock the market down, and that, of course, that's what Powell did. Now this was yesterday because of Google, Microsoft, AMD earnings. The market got a little shell shock there because the Mag 7 stocks, AMD, Apple, Amazon, I guess AMD's not in there, Microsoft, Apple, Amazon, Google, Meta, what am I missing here, Tesla, Netflix. Anyway, the Mag 7 stocks can do no wrong, right? They never go down, right? Well, maybe, because they did yesterday, right? And so we've only got 3 of the Mag 7s left to report, everybody's reported of the Mag 7 except for Apple, Amazon, and Meta, which report all on Thursday, tomorrow after the close. So going to be a big day tomorrow after the close, or a big reaction, because what that, if they're all three up, it's kind of a wash. If they're all three down, they guide lower, for example, or miss, that's going to send a shockwave through the market, signaling maybe the tech rally is over, that kind of thing. It's not going to be good. I really was not expecting that. But after, here's Google. That's Google. Boom. That was Google yesterday when they reported. Here's AMD. And here is Microsoft. Not good. I was not expecting that. So, I don't know. And that's why I'm very, very heavy in cash. Don't have a lot on. I've been bullish all the way up, but we keep talking about it. It's not just me. I don't have a crystal ball, obviously. I just keep saying the higher we go, the less it's gone up too much. It's too high to buy, and it hasn't pulled back enough. Too high to buy it, and if it pulls back, I will buy a dip, but it has to be a pretty substantial dip. So where would that level be that I would get interested? Because the market's not broken. This is kind of normal. It's just the timing is a little awkward with with the Fed. But let me show you one way to look at this, and I think it makes the most sense. If we look at a ribbon here, and let's go out to a 1-year chart. All right, this is a simple ES ribbon. I use this all the time, and basically this is a reversion to the mean. When you get overbought on the upside, you see that white line on the upside, you come back to the mean right there in the center. You get overbought there, you come back to the center. You get overbought there, you come back to the center here, and in this case it kept going down and touched the lower white line. That's negative 3 ATR, that at the top's plus 3 ATR, and you come back up and you touch the center. We do that all the time. Up here, touching the top, we come back down to that white line in the center, touch the top, come back down the white line. Guess what? We were pushing up here. Guess where we've come back to? That white line. And that's very simplistic. I'm just looking at plus 3 ATR, minus 3 ATR, and then the center between those lines is the mean, right? Pretty straightforward stuff, but that's all that we did is pull back to there. So that's the ES. Look at the NASDAQ. We pull right back into it. See right there, that little white line? Now we might, I think it's probably more likely that we do, maybe that's it, and we bounce, keep going. I don't know. Or do we do like this, and we break down, and we come all the way down here, to this level? And these can turn. In other words, these can turn up, or they can turn down, so that level may not be here. Maybe it's here, that kind of thing. By the time this catches up with it, if we really kind of roll over. Again, the market's not broken here. Don't freak out. I'm going to be careful, dip toe back in the water to buy. That's why I favor doing things like diagonals and maybe butterflies, or things that have kind of one-sided risk or lower risk, that kind of thing. But I'm not eager to go out and jump in and just start buying hand over fist here until I see how this is going to all shake out. Because guess what? We don't have a Fed meeting in February. As far as the economic calendar, we've got, so tomorrow, February 1st, we'll have, again, after hours, we'll have Apple, Amazon, Meta, and among others. Still a lot of earnings coming out. And then next week, got a bunch of scattered earnings coming through there. Not a lot of economic data. But on the 13th, Tuesday the 13th, guess what we got? CPI, very important inflation gauge. That'll be our next big hurdle. And then on the 16th is PPI, which is another big inflation gauge. And there's no Fed meeting here. The next chance of a rate cut at a Fed meeting is out here in March. Now, that March meeting, which is March the 20th out here, Right now, there is a 64% chance of no rate cut. So favoring, at this point, we're favoring no rate cut. Market's not going to like that, but it's being factored in right now, I suppose. That means there's 34% chance that they will cut rates. So it's still, so you're saying there's a chance, right? That kind of thing. Too early to tell, but the best thing we can do right now is to stay very light and nimble into Friday, see what happens with all the rest of these earnings, because as those last three big earnings, there's a lot more earnings coming out, but those big ones really move the market, and they can weigh very heavily on the market if they're bad, or they can really prop us up if they're good. And if they're good, then people will look at the other ones and say, well, we'll just buy the dip on Google. I'd be interested in doing that. Probably not aggressively yet, and certainly not ahead of the other earnings, but some of these are starting to look interesting. Amazon's down. It looks pretty interesting. Apple's down for other reasons, but we don't want to. What's the saying? We don't throw the baby out with the bathwater, kind of thing. So we're going to keep eyeing those. That's where the momentum is and all that kind of stuff. Just the momentum might be. There might be less gas in the tank at this point. So we'll keep an eye on that. So with that, let me wind it up, giving you some kind of simple concepts here about the S&P, the NASDAQ, what's been leading. The Mag 7s have been driving the vast bulk of all the gains we've had. So that's why we really need to focus on those and kind of see what happens with those in the next really even couple of days. But stay light, stay nimble, keep some cash. Don't go shorting this thing hand over fist, and don't go buying this thing hand over fist just yet until we kind of let the smoke clear a little bit. And that would probably into at least Friday, after the payrolls. We have payrolls, I forgot to mention. We got non-farm payrolls on Friday morning before the open. So, Friday during the day or into next week, we'll have a little bit better idea. So with that, let me wind it up. If we can help you, come visit us at Simpler Trading. We have quite a few good trading rooms. Our main room is fantastic. We've got some great traders in there. So come join us in there. Join me in there. I'm in there all the time. And also I have a service called Bias where we do trading and setups and talk about things in there. So let me know if I can help. And I appreciate the time. Good trading to everyone, and stay safe. Keep some powder dry. So thanks for the time. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me